Telegram is better with privacy. Well, Keshav, we don't know for sure. I mean, that's what we hear. If you really want privacy, then I would recommend that there's another app. I just seem to have forgotten the name suddenly. Signal. So Signal is really supposed to be very private. Yeah, Signal. Other than that, I'm not so sure about Telegram versus WhatsApp. Okay. So, hi everyone, welcome to today's session on token economics and what we're going to talk about, and which I hope you can see clearly on your screens. So, the previous time we spoke that there are 11 types of crypto assets, and obviously we need to use different models to value them. Last time we did ready money cryptos like Bitcoin, Litecoin, Bitcoin Cash. We did privacy coins like Monero, and we did public blockchain natives. Today we are going to talk about the others, that's application coins, security coins, and governance. So let me quickly start with it. Now, first of all, let's try to understand what the difference between the three is. So when we use the word application coin or application token, so I usually just use token and coin, replaceably. So an application token or coin would be that which is part of a very specific use case. So for example, Filecoin. Now what is the job of Filecoin? You're supposed to use it as an incentive layer for data storage. So it's got a very clear function. Then we have security tokens, which are like shares and they represent ownership of a company. So it's like obviously one of my favorite kind of tokens because you actually get ownership of a company. It's just that instead of going to a regular stock market and buying the shares, you are able to buy the shares on the crypto market, which runs 24/7. And you don't have to worry about which country you are from or which country the company is from. Because in the stock market, that is a major issue. And third is governance coins like Uniswap, which gives you a vote in the project's development. Now, it is very important to understand that security tokens give you the voting, but they also give you ownership. Governance tokens only give you voting, they do not give you ownership. I hope that part's clear. You understood the difference between these three. Any questions? Or is it clear what the distinctions are? Awesome. Now, obviously, to value it, the first step that we're going to do is we enter the symbol and the name. So I'm just taking some random, it's not a real crypto, so I've just taken sample as a symbol and test crypto as the name. Now, the first thing that we need to answer is what category does this crypto come under? Is it an application crypto, governance, or security? And next to it, you will see the multipliers. So, of course, we'll go deeper into the formula of that later. But obviously, as you can see, governance cryptos have the lowest. Next is application, and obviously, security crypto will be highest because it is giving you ownership. So, let's say in this example, it's a application token. Then we need to get the circulating supply. So as you all know, circulating supply means how many tokens are available in the public hands. Now, one very important thing to remember when we write this down, today this may be the number, but we also need to figure out when is the vesting period getting over, which means certain coins which may be locked for the promoters, initial investors, when is that going to open up? So suppose that is opening up in a week from now, the amount of circulating supply could go 5 times, and that could crash the market price or not. So always keep that into account. Don't put today's circulating supply, but let's say you're doing valuation from a 3-month perspective. Take into account what coins will be opened up in the next 3 months also. So I usually do these valuations on a quarterly basis, 3 months at a time. Is it clear? Any questions? Give me a clear if it's clear, so I'll go to the next step. Awesome. Now the next thing we need to do is we need to figure out what is the revenue potential of this crypto over the next 3 years. And now here I'm not talking 3 months, I'm talking 3 years. Now there are various ways to get this information. Can you right now see token terminal on your screen? Just give me a yes if you can see token terminal written here. Nope. Okay, give me a second. I think I understood the problem. I hope it's visible now. Can you give me a yes if you can see token terminal? Awesome. So Token Terminal is one of the few sites that actually gives you very solid revenue information from the blockchains. So they are not going to any third parties. They're actually trying to get this information from the chain itself. So for example, if I look at Filecoin, one of my favorite projects, so here it tells us that over the last 30 days, what has been the revenue of the projects? It's about 1.2 million and it's fallen by 45%. So obviously that's a matter of worry. Why has it fallen so much? So that we can analyze, and then they give you the annualized version, which means this number multiplied by 12. Of course, we could multiply it by 36 to get it for 3 years. Then also remember, there are two kinds of revenues. So there is protocol revenue and then there is another revenue. So in some cases, you may have multiple types of revenue. In that case, they will add all of them together and give you the total revenue also. I have a post very detailed on crypto metrics. So in that, you know, all these P by E ratio, P by S ratio, all have been explained. So it's very important for us to get a good idea about how much revenue this token could possibly generate, or this platform could generate over the next 3 years. Now, suppose we were talking about something like Bitcoin. Obviously, it doesn't fit into the category, but what is Bitcoin's revenue generation? It's basically the miners, how much money are they earning because of new tokens being given to them, and the transaction fee. So similarly, every project does something and it generates some kind of revenue. If it doesn't generate revenue, obviously we should not be investing in that project. But if it is generating revenue, we try to get the 3-year amount, and then we enter that figure here in the revenue potential. Now realize here, it's only revenue potential. We do not have statistics for 3 years of the future. So we are kind of taking a guess. And this is one of the most important metrics to consider. So we've really got to think very carefully, how much can this project actually make? So again, here in circulating, I just took a random example of 1 million. And for revenue, I've taken 10. So I've taken 1 million circulating supply and 10 million revenue. Now we come to the first parameter, which is the organization. We have to rate the organization or the team behind this project. Now, you know, in crypto, there are many projects which are anonymous. I would strongly advise we should stay away from them because we don't know if it's a fraud or real. If we really don't know who's running a project, I wouldn't trust it. So what we try to do here is we go to LinkedIn and other places and try to find out information. Who are the people running this project? How respected are they? So we look at things like their skill, the respect that they have, what is the kind of prior experience in this field, how much credibility they have, and what kind of positive social media status they have. Now, obviously, this is going to be completely subjective. You have to give your own guess here, what you think makes sense. So let's say in this case, we've given it 8 out of 10. So you are going to do this ranking minimum 1, maximum 10. Is it clear so far, the organization part? So for example, if you look at Ethereum, so you would go to their site, you would go to their LinkedIn platforms, you know that there is something called the Ethereum Foundation which runs it. You would look at Vitalik Buterin and a few of the other people. And if you feel that they are really good and they've got solid experience, then you would give a higher rating. And if they are not, you would give a lower rating. Now, usually when a fraud or rug pull happens, it does not happen from teams which are solid and well known, because they've got a lot of reputation at stake. They've built in a reputation over years. So chances of their project failing is much lower as compared to projects which have anonymous or very unknown kind of teams. Is this clear? Give me a yes if it's all clear. The organization part. Awesome. The next thing that we're going to look at is the history of the project. So here we look at we are grading the history and liquidity. Now, again, on a scale of 1 to 10, and if you're giving 10, what does it mean? That this project has shown strong growth in transaction volume, active users, trading volume, adequate liquidity, availability of multiple trade pairs, and listing on multiple credible exchanges. Now here, few points I'd like to clarify. If it's a brand new project, obviously history is not going to be there. So we'll probably just give it a 1 or a 2 because it is too new for us to come to these conclusions. But if it's an old project, then we need to look at all this. So transaction volumes, you know, how much of that crypto is trading every day? So whatever trades happen over a 24-hour period, in dollars are usually measured as the transaction volume, but of course you can take any other currency. Active users, so it's not just how many people have used it in the past, how many are actively using it. A little difficult to get this information, but again, token terminals and other sites will give you this kind of data for some projects. Then we look at the liquidity. Now, what do we mean by liquidity? Liquidity means that when you want to buy or sell, are there enough amounts of token available? It shouldn't happen that it's a solid project, but once you buy the token, nobody's ready to buy from you and you can't sell. So that's a complete waste. You'll end up losing all your money. Availability of multiple trade pairs. So for example, as an Indian, I would want an INR pair available. Globally, you would want Bitcoin, ETH, dollar, USDT, USDC trade pair. The more the trade pairs, the better it is. And finally, listing on multiple exchanges. The more exchanges it is listed on, centralized as well as decentralized, the better it is. Nikhil's question is, if the project is audited, can we get this data from that report like ratings? Well, there are a lot of sites which do give you this information. So if a project is audited, you actually need to get hold of the audit report. In many cases, you can get hold of that, because otherwise, how do we know that in the audit report what's actually happened? Suppose I just announce that my project is audited, but the rating I got was really bad, so it doesn't help. So we need to get that information out. It's not very easy to get it in all cases. Hope that answers your question, Nikhil. Is the history part clear? Give me a yes or an all clear. I'll go to the next one. Awesome. Then we look at the algorithm. Obviously, this is the toughest thing to do. It's not just the algorithm, but it is the consensus mechanism and technology platform. So for this, if you're not a techie, get someone else to do it for you. So personally, I would look at the GitHub repo. I would see how many people have forked it, how many people have started, how many people are actually working on it regularly, submitting some kind of improvements to it. We also look at the consensus mechanism. So if it's a proof of work, we would give it a little lower because of the environmental cost. Proof of stake may get a little higher, but there are 80 plus consensus mechanisms. So once you understand the most important ones, you will be able to give proper ratings here. And the audit usually checks the tech platform from a security and other perspective. It doesn't go into the business part of it. The business part is what we would have done in the revenue part when we did this calculation. And then finally, we look at the social part. So we look at 1 to 10, where 10 signifies large, vibrant, active, engaged, positive community with a fair share of fanatics like Bitcoin has. Now, one very important point to remember here, don't go numbers only, because it is very easy for people to buy fake followers or get fake comments put in. But once you start reading it on different platforms, you'll come to know how much is real and how much is fake. So it's not really the numbers that make so much of a difference. Like there is no logic saying this project has 1,000 and that has 20,000. So that project is 20 times better. No. See what the community is actually doing. Because if the community is active, then even 1,000 people is more than enough when it's a new project. So don't worry too much about numbers. See the quality. So actually go to their social media platforms. Many times they may have 10, Discord, WhatsApp, not WhatsApp, Telegram, Instagram. Go through all of them and then make a conclusion about how much you would give it on a scale of 0 to 10. Is all of this clear? Then I'll click on the calculate button. Can you give me a quick yes if it's all clear? Awesome. Now let me just click here on calculate. Okay. So for this dummy project, it's given us a valuation of 22. So let me first explain how the calculation is done. So this is the information that we have fed in. So what we mean by categories, we took that multiplier, whether it is application, token, governance, or security. We said application, so it gave us 3. Then we entered 1 million as the circulating supply. I hope my screen is clearly visible to all of you. Whatever I'm saying, can you see that on your screens? Awesome. Then we gave it a revenue of 10 million. And then we said for organization, 8 out of 10, history, 7 out of 10, algo, 8 out of 10, social, 6 out of 10. Now, here is how the calculation is going to work. The first step here, the base is calculated. What does base mean? How much is the revenue potential multiplied by the category, which in our case was 3, and the revenue potential was 10 million. So when you multiply it, you will get the answer of 30 million. So this is our base number. Now, what we need to do next is we calculate the average of the grade. So we graded organization, history, algorithm, and social. That's out of 40. So we divide it and we get a multiplier number. Then we do the calculation of the market cap. So what we are basic using as a logic here is this base is multiplied by this number to give us a projected market cap, that how much can we expect the market capitalization of this crypto to be. And finally, to get the price, we just divide market cap by circulating supply. Now, in this example, we got the base as 30 million. We got the grade as 0.725. The maximum grade a project can get is 1. But obviously no project really gets a full, but you obviously have some discounting here. Then when we multiplied these two numbers, we get 21.75 million. When we divide that by the circulating supply, we get a prediction of 22. And then here, I've also made it in such a way that you can actually do it for all levels of your grading. So suppose instead of 0.7, you had given it 0.1, 2, 3, all this. Then it maps it on this graph that if you are bullish on the crypto and you gave a ranking of 0.9, then this would be the amount. This would be neutral and this would be bearish. So these are the three graphs also that it gives us. Any questions so far? I know it may sound a little complicated, but it's fairly easy to use it. And this is where we can then map the entire thing. So you can either look at it here or you can look at it on these three graphs that are plotted. Now, another thing you've got to remember is that valuation is never an exact science, because we're talking about public, right? Everyone is not going to think like you. But in my experience over the last many years, this formula has actually worked for me very well. But again, we have to understand that there are times when things may be bad in the whole market. And that is the reason we then look at these graphs. Can you just confirm that the graphs are visible to all of you? Just give me a yes if you can see these three graphs, blue, red, and orange. Awesome. So when the entire market is bearish, that is the reason, that is the time we will use this line. When the whole market is kind of neutral, we use this. And then when the market is bullish, then we can expect all tokens to actually go up. Now, I know it should not be like this, but that's how it works. Bitcoin kind of runs the market. So when Bitcoin moves, everything goes with it. When Bitcoin goes down, everything goes down with it. So the overall sentiment in the market is also very important for us to understand. And it's again not an exact science, so be careful when you apply this. But in my experience, most of the time, these formulas do help me. And like I said, I usually do this from a 3-month or quarterly kind of a system. Any questions? Is it all clear to you? Just give me a clear if it's all clear. And now if you have questions, please feel free to post them here. So yeah, today I just wanted to talk about this part to you guys. And in the past, we've done a lot of sessions where we've looked at different aspects. And now that in these 2 sessions, we've completed the valuation. Now I want to give you guys some homework. I want you to use these kind of methods to create your own valuation. So, you know, whatever things you like you like a particular project, do your valuation and then submit your report on social media, share it with people. And then let's see, if you come right, a lot of people will start following you for this. Abhishek is talking about a certification course in token economics. Yes, Abhishek, I'll be announcing that next week. On Monday, I will be sending you the details. See, remember, a lot of my material is available to all of you for free. But what a certification does is where, you know, I do a masterclass for you, and then you do an exam in which you have to do an objective test and create some valuations and reports on your own, which will then be checked by me. And it is going to take time, and that's the reason there is going to be a fee for it. So as long as you only want to learn, it's freely available. When you want the certification to be done, then there's going to be a fee, which I will let you know. Is this part clear? Any questions? And I've also developed something called the Future Money Wallet. In fact, this particular system that you're looking at is part of Future Money Wallet. And all of you can open free accounts. Right now, you can do quizzes and you can get free tokens for it. And then I'll also be doing a session on explaining to you what are the features and how you can use the future money wallet. I'll be doing that also very soon for all of you. Any tentative date for next batch of certification in blockchain law? Yes, Ritesh. So the current batch gets over, I think, on the 3rd of December. So 1 week after that, we'll start the next batch. So that would probably be about 10th of December. Hope that answers your question. Any other questions? I'm also going to do a separate session, like I said, on Future Money Wallet very soon. I'll post information. And I hope all of you have joined the WhatsApp group that I've created for token economics. Now that WhatsApp is increasing the number of people in the group and adding more features to it, so I think it's much better to use WhatsApp rather than Telegram for maintaining our discussions. Let me just stop the sharing. Yeah. Anything else you guys would like to discuss? So on the Future Money Wallet, I've also made a series of test questions around token economics. So definitely please look at that. Yes, Kavita, tell me, what is your project idea? WhatsApp group link. Sure. Let me just put it for you. Give me a second. Just getting it. Yeah. Okay, I put the link there. Yeah, Kavita's question is, can we build a crypto token like USDT but for rupee? Yeah, that's an interesting question, Kavita. I'll tell you the problem in the approach. So what happens is the rupee is not fully convertible the way the dollar is, which basically means a foreigner is not allowed to trade in the rupee from another country. US dollar doesn't have that problem, so we can all use USDT globally. But rupee, you can't do that. So ultimately, if you build something, you'll only be able to use it in India, and you will of course need all the regulatory permissions. But in India, we already have things like UPI. So I don't think a rupee backed stablecoin really solves a business problem. So in that situation, I would strongly recommend that don't build a rupee based stablecoin, but you could definitely build it for other currencies. There's so many currencies in the world that could be done. Vivan, your question is about the digital rupee pilot for wholesale segment. Yeah, I'll explain. So actually, this is very different from what most people think. So most people think that when the RBI comes out with CBDC, it is like a crypto. No, it's not like a crypto at all. It is basically a government-backed system. Today, when money is issued, it is in the private databases of banks. When CBDC is issued, it is directly the Reserve Bank or the central bank of the country which issues on its own tech platform. And in all probability, they are not going to use blockchain for this. In India, we already have things like UPI. So when we want to do trading with exchanges, crypto centralized exchanges, UPI, NEFT is more than enough for us. CBDC won't benefit the common man yet. It is still only for the wholesale segment, which means settling transactions between large institutions. So that is not something which is going to benefit us. And it is definitely not part of the crypto industry. Vivan wants to know what problem does it solve and why are they doing it? Very good question. So I'll tell you what happens. Like I said, today money is in private databases. So even the RBI, if they want to know how much money different people are holding, they can't come to know till they request the banks for it. When all this starts to move on a platform controlled by the central bank, they would know anytime who has how much money. That is one of the core benefits of CBDC in the retail sector. So when we look at countries like China, which have already launched CBDC, they are using it to actually control what you spend, where you spend, how and when you spend. So, they can actually put limits. You cannot spend more than so much on alcohol. You cannot spend more than so much on outside your city. Those kind of controls can also be put in a CBDC kind of environment. But of course, in India, in a democracy, it doesn't that kind of things won't happen. So by RBI doing this, it is definitely going to have a lot of benefits for the government. Vinod wants to enter pro token economics, but it requires 4,000 tokens. Can I pay in cash inside? Yes, definitely. So yes, you can, and I'll give you that information about it in detail next week. As soon as I publicly announce the masterclass, I'll let you know about that. So I hope Vivan and Kavita, all of you got answers to your question. Are there any other questions you guys have in mind? Now, please remember, token economics is a really interesting field. And what I feel is going to be the big thing for our industry is going to be the fact that tokens are not restricted to crypto projects. That's a misconception. A non-crypto business can also use blockchain to decentralize itself. It is called a reverse ICO. So it happens in the regular world where you have something called a reverse IPO kind of a concept, where one option is a company issues or lists its shares, but there's a lot of cost involved, a lot of time involved. Second is a profitable company buys over a very tiny listed company and automatically gets its shares listed. So now I'm beginning to see a lot of people who are looking at decentralizing their existing businesses. So tomorrow, even a factory which may be manufacturing steel can actually decentralize its ownership by issuing its shares on the blockchain by way of security tokens. And there are some countries which have already given legal permissions for doing stuff like this. So I would say that that is going to be the next boom area. And this is a solid time to get into token economics. Just remember, in token economics, we have to advise the client end to end. So that is why, if you recall that post that I made on token economics, I've explained step by step what all comes under it. So, these are the different token economic models: inflationary, deflationary, asset backed. And then we've also talked about all the different factors that attend it and the 7 major types of fundraising. So all of that information is important for us. And as token economists, we need to help projects create their own white papers and all that stuff. So that's all part of our job as a token economist. Any questions? One thing I would recommend all of you, just go to Future Money Wallet and sign up for your free account, and then you can start taking the quizzes, and then all the courses and everything else is also built into that. And depending upon how many Learn tokens you already have on Creator, or if you have done any of the Asian School courses in the past or any of my paid programs, I'll be giving you guys an airdrop of Learn tokens, which you can use to buy other courses also. Any questions? Nitin's question is, are they bringing CBDC anytime soon? Yes, in India, CBDC is already started. So on the 1st of November, CBDC has been issued for the retail for the wholesale sector. So right now it's between financial institutions and all. And yes, I do expect in a year or two, it will be available at the retail level also. It's definitely going to be a move in the right direction for our country. There are many other countries also working on CBDCs. So while CBDC is a good thing, just remember it's got nothing to do with blockchain or crypto. Most banks are not going to use blockchain for CBDC. The central bank will use its own tech platforms. Any other questions? Where do these people hold their CBDT? So like today, when you look at something, have you heard of something called RTGS? That's real-time gross settlement. Now that is a tech platform directly run by the Reserve Bank of India, and it handles large-scale volume transactions in real time. So that happens in the mainframes, which are actually maintained with the central bank. So similarly, even CBDCs would be held on conventional technology networks, but not on blockchains. Blockchain doesn't add value to a CBDC project. That's actually a very common misconception. Any other question? Okay, so great. I expect all of you to open up your Future Money Wallet accounts, take the quizzes, get some free Learn tokens. And next week, I'll announce this masterclass, and then we'll interact on that also. Okay. So if there are questions, of course, you can always send it to me later. Join up the WhatsApp group, and I hope to see you guys soon next week. And please do start creating your own valuation reports on different cryptos and start publishing them on social media, especially LinkedIn. And every time you post it, don't forget to tag me. I'll also go and like and share your post. Take care. Bye-bye.